Aramco, the oil firm owned by the Saudi Arabian government, intends to make large financial investments in China's downstream petrochemicals sector. A new refinery will be built as part of this project. Aramco made its choice in response to its record-breaking $160 billion in earnings in 2023. Even though China has traditionally been a U.S. ally, the Saudi Arabian administration has improved ties with the country. China and Saudi Arabia have a long history of cooperation in the profitable oil and gas sector. The international energy market has seen tremendous transformation thanks to this dynamic pair, and they're not done yet. Indeed, this new alliance holds the potential to completely transform the sector. Aramco plans to invest $3.6 billion to acquire a 10% share in Rongsheng Petrochemical. Additionally, they will supply 480,000 barrels of oil per day to Zhejiang Petroleum and Chemical, a subsidiary of Rongsheng that runs the largest refining and chemicals center in China. The purchase by Aramco is a component of a bigger plan to boost the company's global oil market share and establish a stronger foothold in Asia. They will gain traction in one of the energy markets with the quickest rate of growth in the world by collaborating with Rongsheng. Mohammed Al-Qahtani, executive vice president of Aramco, said that this news demonstrates their long-term commitment to China and faith in the country's petrochemical industry. This action additionally ensures one of China's major refiners of a consistent supply of essential oil. Saudi Aramco and a Chinese enterprise are collaborating to construct a state-of-the-art facility that converts oil into chemical compounds. Every day, Aramco will supply the factory with 210,000 barrels of crude oil. Furthermore, they control 30% of Wajin Aramco Petrochemical Company, the business they collaborate with. Saudi Arabia has been fortifying its ties to China and Russia recently. For the first time since 2016, diplomatic relations between Saudi Arabia and Iran were restored according to a deal mediated by Beijing. Amidst all of this, Saudi Arabia announced that it would be buying commercial aircraft from Boeing, a U.S. business. Saudi Arabia reiterated its commitment to China in November, putting aside whatever concerns the U.S. may have had. According to Saudi Crown Prince Mohammed bin Salman, Beijing and its allies share leadership with Washington in the new global order, and the U.S. is just another ally. Saudi Arabia has stated that it will always assist China as their most reliable partner and supplier of crude oil, in addition to other sectors. MBS currently sees Russia as their main energy partner and China as their main economic partner, with the U.S. serving as a security partner lacking in genuine reciprocity. The U.S. shouldn't be surprised by this. At the China Development Forum in March 2021, Aramco CEO Amin Nasser made it apparent that safeguarding China's energy needs for the next 50 years and beyond is their top focus. Remarkably, the U.S. appears surprised by Saudi Arabia's turn toward China, which essentially terminates the long-standing accord between the two nations that has characterized their relationship since 1945. MBS's recent unwillingness to answer a call from President Joe Biden, who asked for assistance in lowering exorbitant energy prices that have harmed the economy, is evidence of this trend. Furthermore, worries about energy-related inflation have only grown as a result of OPEC's drastic reduction in oil production. MBS unilaterally terminated the 1945 deal, infuriating Washington. During the OPEC cut, a number of senior U.S. officials, including Biden, voiced their disapproval. Although he withheld his strategy, Biden threatened to hold Russia and OPEC accountable for their efforts in support of oil prices. But he promised there would be repercussions. National Security Council spokesperson John Kirby concurred that there are worries over the security cooperation between the U.S. and Saudi Arabia. He clarified that, particularly in light of Saudi Arabia's chairmanship of OPEC, President Biden wants to assess the relationship to make sure it's fulfilling American security needs. According to Biden, it's critical to examine more closely and determine whether any adjustments are required. These days, when China and Saudi Arabia join together, oil comes first. In December 2022, Chinese President Xi Jinping paid his first visit to Saudi Arabia in almost 7 years. He spoke with Middle Eastern officials and inked a comprehensive strategic agreement with the biggest oil exporter in the world during the tour. This indicates that while U.S.-Saudi relationships have deteriorated due to OPEC's decision to cut back on the supply of crude oil, China and the Gulf area are forging stronger business connections. China's connections with the Arab world are strengthened by the trip, according to an article written by Xi Jinping that appeared in Saudi media. The Saudi press agency, SPA, claims that many agreements and memoranda of understanding are part of the two parties' partnership arrangement. Their goals are to work together on hydrogen energy and enhance cooperation between China's Belt and Road Initiative and the Kingdom's Vision 2030. The SPA did not, however, provide any specific details regarding these agreements. China is becoming Saudi Arabia's largest trading partner in terms of investment. China is the world's biggest importer of oil at the same time. Saudi Arabia, meanwhile, is China's main Middle Eastern commercial partner and its top worldwide source of crude oil. The head of Eurasia Group's Middle East and North Africa research team, Iham Kamal, emphasizes the significance of energy cooperation between the two nations. He clarifies that the presidents of Saudi Arabia and China will be talking about creating a political structure that allows for their mutual reliance, particularly in light of the current energy revolution in the West. In the coming decades, several countries throughout the world are committed to drastically lowering carbon emissions. Canada and Germany have boosted their renewable energy investments in order to reach this target and move toward economies that emit zero net carbon gases. They are making significant progress against climate change and toward sustainability. China has been focusing more on energy security recently as it struggles to overcome its own enormous obstacles. Trade between Saudi Arabia and China reached $87.3 billion in 2023, up 30% from the previous year. Data from Chinese customs indicated that oil accounted for the majority of commerce. In particular, $43.9 billion in crude imports from Saudi Arabia accounted for 77% of China's entire imports from the kingdom. Additionally, more than 25% of Saudi Arabia's total crude exports were represented by this amount. Xi Jinping's main priority, according to trade policy expert Eswar Prasad of Cornell University, is guaranteeing a steady supply of energy. This is due to China's significant reliance on the quantity and cost of imported natural gas and oil. According to official data from the previous year, China imported 44% of its natural gas needs and 72% of its oil needs from other nations. This indicates that changes in the price and supply of energy on the world market could have an impact on China's economy. In October, at the 20th Party Congress, Xi Jinping stressed how crucial energy security is. The recent blackouts and spikes in energy costs brought on by Russia's invasion of Ukraine served as the impetus for this. China recognized an opportunity and began purchasing Russian oil, which the West had ceased to purchase. From May to July, Saudi Arabia was China's top oil supplier. However, in August, Saudi Arabia surpassed them. Saudi Arabia's energy minister, Prince Abdulaziz bin Salman, declared via the Saudi press agency that China will remain a trustworthy partner in the energy industry. Gal Luft, co-director of the Institute for the Analysis of Global Security, thinks Saudi Arabia has good reasons to improve its energy ties with China. China broke its 2020 annual record for crude oil imports last year, surpassing it as the country's fuel demand increased following the early 2023 removal of the COVID limitations. Chinese imports of crude oil increased by 11% year-over-year to 11.28 million barrels per day, BPD, in 2023, according to figures issued on Friday by the General Administration of Customs and cited by Reuters. The amount of petroleum imported in 2023 exceeded the previous record of 10.81 million barrels per day set in 2020 when China imported massive amounts of inexpensive crude as a result of the sharp decline in oil prices. China's average imports of crude oil were 10.26 million barrels per day in 2021 and 10.17 million barrels per day in 2022 because to low local fuel consumption during the COVID lockdowns and rising oil prices, particularly in 2022, which made refiners less inclined to stockpile crude. However, after China abolished the lockdowns in 2023, demand for fuel, particularly jet fuel and gasoline, rose sharply. Due to the crisis in the real estate market and the uneven recovery in the manufacturing sector, diesel demand was still below historical levels. While not as robust as it was in the year prior to the pandemic 2019, overall fuel consumption was significantly greater than it was in the preceding 3 years. China's imports of crude oil increased from November's low levels to an average of 11.39 million barrels per day in December 2023. That was significantly more than the 10.33 million barrels of crude oil that China imported in November, a 9.2% year-over-year reduction in crude oil intake that was the first yearly decline in crude arrivals since April 2023. This year, analysts predict that China's oil demand and crude imports will be driven by jet fuel and the petrochemical industry. Wood Mackenzie stated in a research this week that China is likely to contribute roughly 25% of the growth in global oil consumption, which is projected to reach nearly 2 million BPD in 2024 compared to 2023. Additionally, China released a large batch of crude oil import quotas to refiners last week for 2024, increasing the allocations from the beginning of the year by around 60% and giving some refiners full-year quotas. It is anticipated that independent Chinese refiners will have more clarity into their plans to buy crude oil during 2024, thanks to the large volumes of import allowances. What are your thoughts on this new partnership between Saudi Arabia and China? Let me know down below. If you want to continue to learn about business investing and financial education, we have got this video waiting on the screen for you to check out. Don't forget to give this video a like and subscribe for more videos like this. Thank you so much for watching, and I'll see you in the next one.